What's up, everybody? Nate here. And it looks like right now in the United States, our entire economy is going through one of the biggest resets that we have ever seen. The stock market has essentially lost all of its gains that it's gotten over the last couple of years. And we're also starting to see markets like the housing market and the cryptocurrency market start to drop in the United States. Meanwhile, you have the cost of living and prices like for groceries and for energy and shelter starting to skyrocket because of inflation. That is causing the Federal Reserve to raise its benchmark interest rates aggressively and quickly to kind of suck all of this out and restart our entire economy. But according to them, this is going to cause some pain. So now the big question is, what exactly can you do? Well, the good news is there is a lot you can actually do to not only survive this potential recession in 2023, but to potentially thrive. So today I'm going to kind of break down how you can actually profit from the 2023 recession, which you can do with your money right now in order to be financially successful, and what you can expect to see in 2023 in order to prepare yourself. All right, so the first thing I want to talk about has to do with money management. Now, money management is the most important thing when it comes to your finances during a recession. And if you don't have good money management, then it's not going to matter if you start to invest or if you try to take advantage of any of the other things I talk about in this video. You have to have good money management. So what exactly does that mean? Well, money management means that you know every single aspect of your money. You know exactly where your money goes every single time you get paid. You know exactly how much you're spending, saving, and investing. During recession times in the United States, you already want to have a system in place with your money with money management, because nobody really knows what's going to happen next. The Federal Reserve might continue to raise its interest rates aggressively and quickly, and that might lead to a lot of job loss, which is very scary, and that directly affects your money. Now, if you don't have a job, then you're not going to be able to do anything with your money, and the last thing you're going to be thinking of is how you can actually start to budget all of your finances when that happens. So you have to have this system in place before. So the easiest way to do that is, bam, create a system with your money called a budget. Now, a budget does not have to be a complicated thing. I'm not saying you have to track every single expense in your financial plan, but kind of break up all of your money into three major categories: spending, saving, and investing. For the most part, you're probably going to spend the majority of your money spending. These are things that you want, and these are things that you need, all of your bills. And if you want to go to that concert, you can do that. But the goal here is that you're not spending all of your money on spending and you don't have enough left for saving and investing. You have to have the other factors too. So what I recommend is the 50-30-20 plan. This means that you're going to be spending around 50% of your income on bills and other expenses, 30% is going to go towards investing, and 20% is going to go towards saving. Now, this means every single dollar that you earn, you're going to take 20% of it and put it towards saving. For every single dollar that you earn, 30% of that dollar is going to go towards investing of some kind, and that means you get to spend the rest of it on whatever you want. I recommend the 50-30-20 plan because in times of a recession, it's a little bit more aggressive. You're investing a little bit more aggressively and you're saving a little bit more aggressively. This is going to help you get those numbers up as fast as possible because we don't know what's coming next, and cash is going to be something that you want. Obviously, not everybody's going to be able to do this. So if you have a lot of dependents, if you have a lot of bills, follow the 75-15-10 plan. It's going to work the exact same way, except for 75% of every dollar you earn is going to be spent, 15% is going towards investing, and 10% is going towards saving. Now, I know it seems like a lot right now, but you have to create a system for your money, and the faster you do that, the more it'll just feel like second nature. You're able to actually create this system of spending, saving, and investing, and you're actually building for your future while spending your money as you please. Now, that's on the money management side, and you have to have a budget for any of these other things to work in this plan. Now, I mentioned in that budget plan, though, that you need to start saving, and if you don't have anything saved right now, that should be your number one goal with your finances going into 2023. You have to have some money saved up in case of an emergency. If something was to happen to you, your family, your house, or anything else in your life, you have to have the money for that. Because think about it, if you don't, now you just have to go into more debt. You have to take on a loan or spend on your credit card in order to pay for that thing. You're financing your problems, and that's just going to create more financial problems in the future, and it's going to prevent you from spending spending in the future, investing in the future, or just saving because all of your money is going towards your debt. So you have to start saving your money because this is your financial base. Now that you have a budget, now that you're able to save your money, save as much as you can. Start small. Start with around $1,000, $2,000, or $3,000. That's going to protect you from most of life's problems, like a broken window, or if your computer crashes, or if you get a flat tire, stuff like that, right? Stuff that you can easily replace very quickly. Obviously not everything, and it might just be something that you're able to subsidize with and take on debt later, but the bottom line here is that you're saving and doing as much as you can to protect yourself. And during times of a recession, you might lose your job, and this means that this emergency fund is going to be there to protect you for your first few months while you try to find another one. Think about if you don't have that money and now you're taking all of your expenses and putting them on credit cards or taking on debt, and that could take you years to climb out of. Now that is the budgeting and saving side, and what that does is create a system for your money that ultimately protects you against most things that are going to happen in life. Now, how can you actually profit off of the 2023 recession? Well, it comes down to one word: investing. This is now where you have to start investing your money aggressively, and 2023 is going to be a great time to do that because we're starting to see right now in 2022 asset prices start to drop. As the Federal Reserve raises its interest rates, that makes it really difficult for companies to take on debt and grow, so the stock prices are falling. Like I said before, they've lost most of their value that they've gained over the last 2 years. It's a complete reset. So what that means is now you can come in and start to buy a lot of these assets at a discount. Companies that are listed on the New York Stock Exchange, well, fundamentally, it's not really their fault that the economy is going through this downturn. The Federal Reserve is sort of causing it. Inflation kind of happened. So they are the ones, though, that are now at the sort of center of all of this downturn because they're the ones that are losing employees and sales and all of that. So they are obviously taking the brunt of it. But fundamentally, there's really nothing wrong with the companies. And if we were in a low interest rate environment with lots of money printing, they would be thriving right now. So the key for you is to start investing in these companies methodically. So you're starting to look at companies that have good fundamentals, companies that make good revenue and good profits, and actually make a solid product that solves a lot of consumer issues. These are good companies that you want to put your money behind and that are going to continue to survive beyond a recession because the United States needs them. They are highly in demand, so you can jump in and start investing, and it's super easy to do that. All you need to do is sign up for an investment app. Most of these apps are free, they have no fees, and you can sign up in literally 1 minute, so you can start buying and selling these shares almost immediately. Like I said, only caution is just to make sure you're investing in good companies and that you do your due diligence and research before you buy a stock. Nobody's guaranteed to make money in the stock market or in any market for that matter, but the fact of the matter is these companies are going to be dropping in value in 2023, meaning it's a good time for you to jump in and buy. They call it buying the dip because all of these companies are dipping and then you jump in at the lowest price that they are, and eventually the prices are going to go back up. We have no reason to believe that the stock market is going to stay down forever because no matter how many times it has done this in the past, dropped in value, it has almost always gone up. We've had stock crashes, we've had depressions in the United States, and the stock market is still here. So there's no reason to not expect to see that in the future, but you can take advantage of that by buying when prices are at the lowest point. Now, the other thing you can do is invest in yourself. You invest in your own education, you invest in your own skills. If we do see an economic downturn and a recession in 2023, like a lot of experts are predicting, that means that we're going to have job loss. But at the end of the day, there are still going to be opportunities out there for people that have the right mindset and the right skill set. If you are somebody that is highly skilled in something, if you are somebody that has a skill set that is really in demand, then it doesn't matter what happens with our economy, you are going to be in demand, and that means businesses are always going to want to pay you money. That's because they need you, and as long as we have businesses and as long as we have an economy, there's going to be a place for you. So you want to try to build up those skills and knowledge as much as you can. You want to try to educate yourself throughout the rest of 2022 and start to gain skills and work on yourself. So even if we don't see a downturn in 2023, well, you'll still have all of this knowledge and experience that you can eventually use on other businesses to either get yourself a better job or a promotion or whatever you want. There really isn't much downside to investing in yourself. Obviously, it's going to take time though, and the sooner that you do this and the more experience that you gain, gain, the more highly skilled you're going to be and the more valuable you will become to a company. And the last thing that we have to talk about is streams of income, because like I said before, if we do see a lot of job loss in 2023 and you do end up losing your job, well, that pretty much throws off your entire financial plan, because you can't create a budget if you don't have a job. You can't save money if you don't have a job. So the number one thing that you can do to kind of prevent that is to get a second stream of income or a third stream of income. That way your income is not determined solely by your job. You have other money sort of coming in, and if you were to lose your job, then you can kind of rely on something else. It's diversifying your own money. And there are two basic ways to do that. You can go through active income or you can go through something called passive income. Active income would be something like, well, you manage your own property from scratch, right? You go out and buy a real estate investment and then you manage that tenant or those properties all by yourself. And that is going to take some time away from everything else in your life. It might take you 10, 20, 30, and even 40 hours to have that second stream of income, but it's basically like a second job. You could also get a side hustle, or you could write a book or start producing music or whatever you want to do, right? Ultimately, what it comes down to is that you are going to have something else that is going to make you money, and you are physically doing something to make money. It's active income, and you can bring this in as a second stream, so that way if your main source of income goes away, you have something else to rely on. But then there's something called passive income. Now, passive income requires work up front, like let's say you buy a property, but then that income becomes passive if you hire, say, a property management company. Now, all you're doing is kind of looking at the big picture stuff, and you're collecting the money from your tenants, but the property management company is doing all of the day-to-day management. So you are able to actually continue to gain that income even though you're not really doing anything, and that is called passive income. Passive income could be from a lot of different things. If you write a book and put it out there and then you make residual royalty checks off of that over time, that is passive income. You put up the money up front, you do something up front, and then you basically are just left with the money continuing to come in time and time again. Something else you can do is something called dividends in the stock market. So if you were to buy a stock that has dividends, that means every quarter or every other quarter or every year, that company is going to give out a dividends payment. Dividends are basically something that you can gain from owning a particular stock. So if a company has a lot of excess profits, they'll actually redistribute all of that money to the shareholders, and that is in the form of a dividend. You can usually gain a couple cents or a couple dollars per every single share that you own. So the more shares that you own, the more dividends you're going to make. And like I said, they give out these payments once a month or once a quarter or once a year. And eventually, as you buy more shares, then you're going to have higher dividend payments. And if the companies that you invest in are doing well, then you're going to have even bigger dividends. So now at the end of the day, you're really not working for any of your money because you're just buying these shares, holding on to them, and receiving all of those dividends. Of course, you can reinvest those dividends if you want to, but you can also take this as straight cash, which again will help you thrive in the future. Now, obviously, we do not know what's coming in 2023, right? We could see a massive economic recession. We could actually see stock prices in our economy go way back up. But the key takeaway of this video is that you need to be prepared for both scenarios. You have to be prepared for your finances beforehand, because nobody knows when exactly we're going to go through that massive economic downturn. It could be tomorrow, it could be 5 years from now, but the bottom line is you're prepared no matter what. And if you are prepared for it, then you're able to kind of profit off of it and start thriving, because you're not starting from nothing. You have a good system with your money, you have a good budget, you have a good savings plan, and you're already starting to invest. If you're doing all of that on a regular basis, you're not only building wealth, but you're preparing yourself to swoop in on opportunities. And if you're already ahead of the game, then you can do that a whole lot easier than somebody that is just now finding this out. And there's really no downside to doing any of this, right? Like with you investing, well, even if we don't see an economic recession in 2023, that's okay, because you now hold on to an asset that you can continue to hold on to for the extended future. And you have a second stream of income that if your business was to go out of business anytime soon, then that's going to protect you too. So preparing is a whole lot better than not preparing. Now, obviously, all of these things I discussed in this video are a choice, right? As an American, you have a choice when it comes to your money. That is the freedom that our country provides. If you're listening to me and saying, Nate, I don't want to invest my money. Look at the market. It's crashing right now. I don't want to save my money. I'd much rather go out and do fun things because our entire economy is about to collapse. Well, that is totally up to you. You can go out and do these things. You can spend your money. You can not have a system for your money at all. That is entirely up to you. But there is a risk there. You might think there's a risk to investing. You might think there's a risk to saving your money. But at the end of the day, there's also a risk to overspending too. And there's a risk to not investing. And you have to ask yourself, what is the most important thing to me right now? Is it preparing myself and my finances and my family for a potential recession? Or is it going on that lavish vacation or getting that new fancy car? What is the most important thing to you right now? There's nothing wrong with having things, but I want you to make sure that you can afford to have things, and I don't want you to have to put your entire financial journey at risk simply because you want to spend money right now instead of invest. And obviously there's going to be a lot of scams out there, a lot of get-rich-quick scams that offer you millions of dollars or riches to just invest something small right now. And like I said, the bottom line here is that you need to kind of pay attention to your finances when it comes to a recession in 2023. You have to make smart money moves, and if your goal is to subvert a recession and protect your family, then you have to be thoughtful when it comes to your money. No situation is perfect, and you're not going to be able to predict every single outcome that happens in 2023. That is just life. That is how it's going to be. But economic downturns like a recession can either crush you financially and hold you back for years to come, or they can make you wealthier than you ever thought you possibly could be. And that is exactly what I want to see for you, but it all starts with the right money moves. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.